Hey everyone, and welcome back to the channel. Get ready, because today we're diving into one of the hottest stock market debuts of the year that has Wall Street buzzing. I'm talking about Figma, the design software company that just hit the stock market like a rocket. Their shares exploded, soaring almost 160% on their first day of trading. Now, you might be thinking, what's all the fuss about? Well, Figma's initial public offering price was $33 a share. But when it opened for trading, it shot up to $85 a share and then quickly climbed even higher, sometimes topping $117. This pushed its total company value to anywhere from about $50 billion to over $57 billion on its debut day. But here's the real question. Is this explosive growth sustainable? And what does it truly mean for you, the everyday investor? I'll give you the full scoop on that at the very end of the video, so make sure to watch until then. So what exactly is Figma? Think of it as the Google Sheets of design. It's a collaborative online platform that lets designers, coders, marketers, and even non-designers work together in real time on building everything from websites and apps to digital products. Imagine multiple people editing a document at the same time, but for creating stunning visuals and user interfaces. It's all done right in your web browser, which makes it super easy to use, no complicated software downloads needed. This simplicity has made Figma incredibly popular. We're talking about a company used by nearly 80% of Forbes 2,000 companies and over 95% of Fortune 500 businesses. Their customer list includes huge names like Netflix, Airbnb, Duolingo, Microsoft, Google, and many, many more. They boast over 13 million monthly users, and here's a shocker, two-thirds of them aren't even professional designers. That tells you just how accessible and widely adopted their tools have become. Figma was founded in 2012 by Dylan Field and Evan Wallace. They had a vision to make design tools easy for everyone, and boy, did they deliver. Figma's market debut on July 31st, 2025 wasn't just big, but it was a game changer for the tech sector. This IPO raised over $1.2 billion, with about one-third of that going directly to the company for future growth, and the rest going to early investors. This listing is being called a bellwether event for the tech sector, signaling that the U.S. IPO market is bouncing back after a nearly 3-year dry spell. As one expert put it, tech IPO investors have been starved for new deals, and Figma certainly delivered. Here's where it gets even more interesting. Just back in December 2023, industry giant Adobe tried to buy Figma for about $20 billion. But antitrust regulators in both the US and the UK blocked that mega merger, worried it would stifle competition. At the time, Figma CEO Dylan Field made a bold move, actually cutting the company's internal valuation to a more conservative $10 billion baseline. But look at them now. Their debut valuation of around $50 billion to nearly $59 billion absolutely crushed that abandoned Adobe buyout. That failed acquisition and the $1 billion termination fee Adobe paid actually gave Figma the fuel it needed to become an independent powerhouse. The demand for Figma shares was insane. The IPO was 40 times oversubscribed, meaning there was 40 times more demand than shares available. This clearly shows investors are hungry for high-growth tech firms, especially those with strong AI or artificial intelligence capabilities. So what's driving this massive investor excitement? A huge part of it is AI. Artificial intelligence. Figma isn't just a design tool. It's rapidly transforming into an AI-powered design and collaboration powerhouse. They're investing heavily in AI, calling it core to how design workflows will evolve. Figma has already rolled out several AI-built products. Figma Make. This is a game changer. It lets users generate functional prototypes from simple text prompts or even existing designs, cutting development time by as much as 40%. Imagine saying, build me a website design for a coffee shop, and AI does the initial heavy lifting. Figma Sites, this tool lets users publish dynamic websites with responsive layouts and embedded content with just a click. They're even planning to add content management system integration, empowering marketers to update content without needing a developer. Figma Draw, this takes vector editing to a new level with advanced tools. Figma Buzz, designed for brand and marketing teams, helps create scalable assets while keeping brand consistency. These AI innovations are making design more accessible, faster, and more efficient for everyone, not just professional designers. This focus on AI is crucial because, as one expert noted, if this company didn't have an AI strategy, it would not be seeing this level of demand. Software companies with a strong AI element are what investors want to buy right now. Looking at their financials, it's clear why investors are so bullish. Figma reported nearly $750 million in revenue in 2024, marking a solid 48% year-over-year growth. For the first 3 months of 2025 alone, revenue hit over $220 million, and net income more than tripled to almost $45 million. They boast impressive financial health, with high gross margins of 88 to 91% and a 17% operating margin, which is rare for a high-growth tech company. Their net dollar retention rate of 132% is also a strong indicator that existing customers are not only sticking around, but also increasing their spending on Figma's premium features like AI tools and enterprise integrations. Now for the big reveal you've been waiting for. Is Figma's post-IPO valuation justified for long-term investors? Let's look at the key players first. Dylan Field, the 33-year-old co-founder and CEO, is now worth an estimated $1.8 billion to over $3 billion. He still holds about 74% of the voting rights in the company through special Class B shares that have 15 times more voting power. His co-founder, Evan Wallace, who left in 2021, is worth about $1.3 billion, and he actually donated one-third of his shares to an anti-homeless nonprofit. Pretty cool, right? Figma's early venture capital backers are making a killing. Major Silicon Valley firms like Kleiner Perkins, Sequoia Capital, Index Ventures, and Greylock all sold a portion of their shares in the IPO. Sequoia Capital, for example, invested when shares were just over $1, and with Figma's IPO price at $33, Sequoia is looking at a huge return on its roughly $150 million investment. Index Ventures alone now holds a stake worth over $5 billion. However, it's not all sunshine and rainbows. Some market experts, like CNBC's Jim Cramer, believe Figma's valuation is too high. He pointed out that Figma is trading at a whopping 53 times its revenue, making it one of the most expensive stocks on the market, second only to data analytics firm Palantir, which trades at an incredible 689 times its earnings. Kramer warns that while it's natural to get too excited about hot IPOs, paying exorbitant prices for shares often doesn't end well for investors. So, is the high valuation justified? For long-term growth investors who believe in the power of AI to transform industries, many sources suggest yes. Figma's aggressive AI-driven product roadmap, its strong market leadership with over 40% market share in design software, and its robust financials, including high gross margins and impressive customer retention, build a compelling case. The company is already cash flow positive, which is rare for such a high-growth tech company, reducing some of the downside risk. CEO Dylan Field himself has cautioned investors to take a long-term view, stating that the company will make big swings in investing in its platform and acquiring other companies. He also noted that markets wax and wane and short-term volatility should be expected. The verdict? Figma is a long-term play on AI-first design. Its valuation reflects high expectations, but if its AI-driven tools continue to redefine design workflows, attract new users from beyond just designers, and expand globally with 85% of its users already outside of the US, it could be a very rewarding investment for patient investors. That's all for today's market breakdown. I hope this gave you a clearer picture of Figma's explosive IPO and what it means for the future of tech. If you found this information helpful, please hit that like button, subscribe to the channel for more insights, and don't forget to ring that bell notification so you never miss out on our latest videos. See you next time.